Tomorrow morning, while most people across the country are still waking up, the Social Security Administration will begin processing what could be one of the largest payment batches of the month. For those expecting funds, there is critical information to understand that could directly impact the amount that arrives in your account. Deposits could reach $2,400 or more for some recipients. However, what is not often explained clearly is that the amount you receive and the exact day it arrives depend on factors that many people have never been told about. This lack of knowledge can cost thousands of seniors money they have already earned and rightfully deserve. To be completely straightforward, the Social Security Administration operates on a strict payment calendar based on when you were born and when you first started claiming benefits. Understanding this system is not just helpful, it is essential to avoid financial surprises and ensure you receive every dollar you are entitled to. If you were born between the 1st and the 10th of any month, your payment arrives on the second Wednesday of each month. Those born between the 11th and the 20th receive their payment on the third Wednesday. For birthdays falling between the 21st and 31st, payments are scheduled for the fourth Wednesday of each month. However, it becomes more complicated when considering supplemental payments, cost of living adjustments, back payments for processing delays, and special one-time deposits, all of which can change these amounts dramatically. The Social Security Administration processes over 70 million payments every single month, each following a system carefully designed over decades. What concerns financial advisors is that thousands of seniors miss out on money they have earned simply because they do not understand how this system works. When discussing a deposit of $2,400 hitting your account, this is not just your regular monthly benefit. It involves a combination of factors including your primary insurance amount, any cost of living adjustments applied, potential back payments if there were delays in processing, and supplemental payments you might qualify for based on your specific circumstances. The mechanics of the payment batch are based on a staggered payment schedule. This schedule has been in place since 1987, when Congress decided that sending all Social Security payments on the third of every month created massive logistical problems for banks across the country. Thus, payments were split based on birth dates. If you started receiving benefits before May 1997, you are part of what is called the legacy group, and your payments come on the third day of every month, regardless of your birth date. However, if you started receiving benefits after that cutoff date, your payment day depends entirely on which part of the month you were born in. The upcoming payment batch is special because it includes additional payments that do not follow the normal schedule. The figure of $2,400 is not arbitrary. The average Social Security retirement benefit is around $1,176 per month for individual retirees. What makes this payment batch different is the combination of regular monthly benefits plus potential supplementary payments that some seniors qualify for but many do not know exist. If you are receiving the maximum Social Security benefit because you worked for 35 years at or above the maximum taxable earnings limit, and you delayed claiming until age 70, your monthly payment could be as high as $4,970. That is the absolute ceiling, but most people do not receive that amount. What we see with this deposit is more nuanced. The Social Security Administration periodically issues supplemental payments from several sources. First, there is the annual cost of living adjustment, which for the current year came in at 2.5%. This means that if you were receiving $1,800 per month last year, your payment automatically increased to approximately $1,845 starting in January. However, sometimes the Social Security Administration makes errors in calculating these adjustments. When they catch these errors, they issue back payments to make up the difference. These back payments can add several $100s to your regular monthly deposit, and they usually come without much warning except for a notice in the mail that arrives either right before or right after the money hits your account. Another source of additional funds could be related to supplemental security income, commonly known as SSI. SSI is different from regular Social Security retirement benefits, but many seniors receive both programs simultaneously. SSI is needs-based, designed to help people with limited income and resources. The monthly federal payment for an individual is around $943. If you qualify for both Social Security retirement and SSI, These payments are calculated separately and sometimes arrive in the same deposit, which can make your total monthly income appear much higher than your base Social Security benefit alone. It is important to understand that SSI payments follow a different schedule than regular Social Security. They typically arrive on the first of the month, but when payment dates fall on weekends or holidays, things get shifted around, and multiple payments can end up hitting your account on the same day. Now, let us discuss something that hardly anyone talks about, but absolutely should: the taxation of Social Security benefits. Depending on your total income, you might have to pay federal income tax on up to 85% of your Social Security benefits. This does not mean the government takes 85% of your check. It means that up to 85% of your benefit amount could be considered taxable income when you file your tax return. Here is how it works. The Internal Revenue Service looks at what they call your combined income, which is your adjusted gross income plus any non-taxable interest plus half of your Social Security benefits. If you are filing as an individual and your combined income is between $25,000 and $34,000, you may have to pay income tax on up to 50% of your benefits. If your combined income exceeds $34,000, up to 85% of your benefits may be taxable. Now let us talk about the Windfall Elimination Provision and the government pension offset. These are two rules that can significantly reduce your Social Security benefits if you also receive a pension from work where you did not pay Social Security taxes, which is common for certain government employees and teachers in some states. The Windfall Elimination Provision can reduce your Social Security benefit by up to half of your pension amount. The government pension offset primarily affects spousal and survivor benefits and reduces those benefits by 2/3 of your government pension amount. These provisions are incredibly complex, and many people do not discover they are affected until they actually apply for benefits. Here is something else that is absolutely essential to understand about the upcoming payment: the difference between your primary insurance amount and your actual benefit amount. Your primary insurance amount is the benefit you would receive if you claim Social Security at your full retirement age, which is 67 for anyone born in 1960 or later. But your actual benefit amount depends on when you choose to start claiming. You can claim as early as 62, but if you do, your benefit gets reduced by approximately 30% compared to waiting until your full retirement age. On the flip side, if you delay claiming past your full retirement age, you earn delayed retirement credits that increase your benefit by 8% for each year you wait up until age 70. Let me share something that financial experts know, but most regular folks do not. Social Security benefits can continue to increase even after you start receiving them, and not just because of cost of living adjustments. If you're working while receiving Social Security benefits before reaching your full retirement age, there is an earnings test that can temporarily reduce your benefits if you earn more than a certain threshold. For the current year, that threshold is $23,400. If you earn more than that, the Social Security Administration withholds $1 in benefits for every $2 you earn above the limit. But here is the good news: those withheld benefits are not gone forever. Once you reach your full retirement age, the Social Security Administration recalculates your benefit to account for the months when benefits were withheld, effectively giving you credit for those payments in the form of a permanently higher monthly benefit going forward. Another factor that can boost your payment is if the Social Security Administration discovers that your earnings record was incomplete or incorrect. This happens more often than you might think, especially for people who had multiple jobs or worked for small businesses that might have had payroll issues. The Social Security Administration is supposed to automatically update your earnings record each year based on what employers report, but mistakes do happen, and these adjustment payments can be substantial, especially if the error affected multiple years or occurred during your highest earning years. Let us talk about survivor benefits because this is another area where people can see unexpectedly large payments. If you are a widow or widower receiving survivor benefits based on your deceased spouse's earnings record, you might be entitled to more money than you are currently receiving, especially if your spouse had delayed claiming their own benefits or had high lifetime earnings. Survivor benefits are calculated based on what your spouse was receiving or would have been entitled to receive, and they can be as high as 100% of that amount, depending on your age when you start claiming them. Many people do not realize you can switch between different types of benefits if it is to your advantage. Here is something about Medicare premiums that directly affect your Social Security payment. If you are enrolled in Medicare Part B and Part D, those premiums are typically deducted directly from your Social Security payment before it hits your bank account. The standard Part B premium for most people is $185 per month. However, if your income exceeds certain thresholds, you will pay an income-related monthly adjustment amount that can push your premium much higher based on your tax return from 2 years prior. Keeping your personal information updated with the Social Security Administration is crucial to avoid delays or errors in payments. If you change your address, bank account, or even your name due to marriage or divorce, you must notify the administration promptly to ensure your payments continue without interruption. Many people overlook this simple step, leading to missed payments or funds being sent to old accounts. Additionally, if you experience a change in marital status, it can affect your benefits. For example, if you are divorced but were married for at least 10 years, you may be eligible for benefits based on your former spouse's earnings record, which could be higher than your own. Remarriage can also impact survivor benefits, so it is important to understand these rules before making decisions. Direct deposit plays a vital role in ensuring timely payments. By having your benefits deposited directly into your bank account, you eliminate the risk of lost or stolen checks and receive your money faster. The Social Security Administration strongly encourages direct deposit for these reasons. Furthermore, be aware of scams that target Social Security recipients. The administration will never call you unexpectedly and demand personal information or payment. Always verify the authenticity of any communication by contacting the administration directly through their official channels. The upcoming payment batch represents more than just money hitting bank accounts. It represents the fulfillment of a social contract that has been in place since 1935. You paid into the system throughout your working years, and now you are receiving the benefits you earned. Therefore, make sure you know your payment schedule, check your mail for explanation letters if amounts seem different, review your Social Security statement annually, and do not hesitate to contact the Social Security Administration if something does not seem right. This is your money that you earned, and understanding these details can help ensure you receive every dollar you are entitled to. Stay informed, stay proactive, and take control of your financial well-being in retirement. Remember that Social Security is a complex system, but taking the time to understand it can pay significant dividends. Do not hesitate to seek help from certified financial planners or Social Security representatives if you have questions. Your retirement security depends on making informed decisions, and every dollar counts. With the right knowledge, you can navigate the process confidently and secure the benefits you have worked hard to earn.